Live from the Citadel. It is a beautiful day on the East Coast. Oh man, I am out of water. Look at that. Oh man, need to get my house elf over here, or one of my sons. As you can see, I have worked out and I've still got a little bit of bedhead because I got right up, worked out, and have not yet showered. So my hair is crazy, as I'm sure yours is. And you caught me with a little off-camera moment. This is what happens when I don't have regular haircuts. It just starts getting out of control. So now that you've seen a little bit behind the scenes and you know exactly where I am in my stage of the day, we can kick right off. People that are on Periscope, 75 of you, thank you for joining Masari's COVID and Crypto Daily Updates. If you want to join the interactive chat, you can pop a question into Periscope, but you probably want to hide over, skip right over to crowdcast.io/2bitidiots if you want to ask more interactive questions and join the chat there. This is going to be live streamed to YouTube as well, so people can watch on the replay. At least we're working on it. That's the goal, and we're getting one step closer as we get used to the Crowdcast platform. We have Chow on today to talk about macro. He's been killing it with our macro coverage. Lane, so good to see you. Lane, I might call on you as a cold call for a guest appearance because we're trying to make these more of a live radio show. So if you're ready and you're around, we might get to you in a few minutes for a quick check-in based on the phenomenal post that you finally dropped. It took about a year. But Lane Rettig is one of our interactive members this morning. He's a former Ethereum Foundation developer and has written quite a bit about governance, which happens to be one of the core themes that we are going to rally around for our mainnet conference in June. Lane, thanks for joining. For the kind of quick hit on the coronavirus, obviously being a New Yorker, I have a Western bias and New York bias in particular. It was not a great day for New York, New Jersey. Record deaths in the state of New York and the city, especially. Looked like over the weekend there was a mellowing of the death rate, although the New York City Health Council chairman did say that they may be undercounting given there's a much higher frequency of deaths at home now than is typical, about 10x the typical number of deaths at home, about over 200 per day now versus 25. So they're attributing a large chunk of that to unreported or untested coronavirus cases. Nevertheless, we finally saw a reversal in the death rate up to 800 in the state of New York to bring it up to about 5,500 total. So it does not appear that the peak is in quite yet, although there are some early positive signs that the pace of growth is decelerating. So hopefully we are getting to the worst part of the crisis right now, and some of the major US and other Western cities may be able to avoid the horrors of triage that we saw in Italy and in Wuhan, where people are essentially making life or death decisions based on age, based on pre-existing conditions, and unfortunately having to give up on some patients. So I'm keeping my fingers crossed. I'm feeling more optimistic in general about the health crisis. If you've followed me on Twitter, you've probably seen some of that. I don't think this is me being sanguine. I think it's legitimate positive developments and some good news about the actual flattening of the curve. But what I don't think is being accurately reflected in the market or in people's expectation is exactly how bad things are getting on a macro level. It is tough to be bullish on where we are right now from a macroeconomic standpoint when you see the market rally by 15% in just a couple of days. It did come back yesterday. I think it got as high as almost 15%. But yesterday was the first day since 2008 that we saw a 3.5-point S&P rally that was completely retraced in the same session. Last time that happened, October 14th, 2008. If anyone remembers that day, it is because you are an old fogey. And It's because that was the day that Hank Paulson faux gras the banks and forced them, even the healthy ones, to take the Fed's and Treasury's bailout money as part of the great restructuring and TARP program in the great financial crisis. So there's a lot of weird trading now, and this is pretty much what you'd expect in an environment where the market is pricing in bad news as if it's good news from a stimulus standpoint, and good news as if it's mediocre news. I think people are getting ahead of themselves on unemployment, the second order effects, the supply chain disruptions, and we just haven't seen an upstart, I think, that would justify a reset in bullish expectations just yet. Chow's going to talk about that a little bit based on what he's been covering. If you're not already subscribed, go to messari.io/newsletter. Chow is writing 2 macro pieces per week. We've got 1 new pro piece coming out each day that we can refer you to. It's a great deal, and all of my blather and drivel is free. So you get exactly what you pay for. The other developments that obviously we're tracking pretty closely is what exactly is going on in the UK with Boris Johnson. It seems from the latest news that his fever is easing and he is stable, although he's still in the ICU. Has not had to move to a ventilator. That's big. I've always feared that if one of our major world leaders gets the coronavirus and is put on a ventilator, even if they don't die, I think it would send shockwaves through those regional economies and spook many of the countries that are behind them in terms of infection spread. And it also potentially lengthens the amount of time that we are in full shutdown, which the longer this goes on is going to have larger and larger macroeconomic consequences and negative impact to people's jobs, to people's investment portfolios, which is obviously what we're focused on, at least in crypto terms at Messari. So it's not all bad news. The one bit of good news that I'm hoping we find a way to actually get over the goal line. I would love for sports to be back. Everybody wants sports to be back. We need some release right now. And I could really go for some old-timey baseball games being played in the state of Arizona, which seems to be under discussion. At least the commissioners from some of the major leagues were in touch with President Trump in the last couple of days, talking about when exactly they might be able to reopen their seasons. Looks like the NBA is probably off the table for this year. That's too bad. NBA playoffs is a season in of itself and one of my favorite sports to watch. But there's nothing quite like watching a baseball game outside in the summer in the US of A. So there's a nostalgia factor that I think will be something worth watching for if they can find a way to open up the season and sequester these teams and at least let them play, even if they're in empty stadiums, to have that telecast. I think it would be wild, and it would certainly be good for everybody that's cooped up and otherwise, struggling to stay sane amidst a prolonged quarantine. We've got a ton of folks that are in the interactive chat right now, and I will field questions from them. If you are on Periscope, again, you are missing out. You're only getting half of the daily update. So head on over to crowdcast.io/2bitidiot and sign up for the updates there. I'm going to cold call on one of our unplanned guests. This is what spontaneity is all about. Got to be spontaneous, got to mix things up. I'm winking a lot today. That's how you can tell that I'm tired and that I'm going a little bit nuts, like I'm sure many of you are. In any case, for those that are not on the live stream and that are on Periscope, what you need to know today: macro environment still looks questionable. Some reason for optimism with the coronavirus health crisis. Lots of reason for optimism for Bitcoin and crypto assets. And we're going to be touching all of that and more, not only during this live stream interactive session, but during our flagship virtual event, the Mainnet, June 1st through 3rd, with over 100 of the industry's top speakers. Hop on over to live stream and Crowdcast. And until Friday, we have another couple of very good guests Stay safe, be good. Ciao to my Periscope people. Okay. Lane, what a treat this is. Let's have you hop on screen here before we get to ciao. I want to encourage folks like Lane to join spontaneously. It makes it so much more fun, especially when they have something topical to talk about, like you do. Lane,
I literally did not know this was possible. I'm like still freaking out a little bit. This is like,
it's great. It's great. Like, you're on the spot. You're live.
No, this is like you're watching TV, and then all of a sudden the TV starts talking to you, and I'm just like, I should be used to this by now, but I'm not used to Periscope. So hey, this is amazing.
Yeah, exactly. And this is one of those magical moments that I think this particular platform enables, because a couple months ago, like pre everybody being under house arrest, this is interesting, but it's not killer. Right now, though, it's like, wait, I can basically go to my bar next door and, hey, funny running into you here, right? Which is exactly the type of experience that I think we're hoping for. Lane, for those that don't know you, so first of all, are you in New York right now?
I am, for better or for worse. I'm in the belly of the beast, and
in Brooklyn, no less, right? Yeah.
I'm in Manhattan, and I'll preempt your next question by saying that I mean, obviously, as you spoke to in the beginning of this session, there's a lot of really terrible things happening, and I don't want to downplay that, but it's very quiet, is what I was going to say. It feels like extended Christmas in New York, and the streets are quiet, and the shops are empty, and the park is quiet, and that part has been a bit surreal. If you're a New Yorker, you know the energy the city usually has.
Mm-hmm. Lane, it's good to hear that things are quiet, all things considered. I'm sure it's probably a little bit eerie, and it was that way even before I left a few weeks ago, or at least getting that way. Let's real quickly, while we have you, talk a little bit about your post on governance and really the research that you've done on governance. For those that don't know you, you've been kind of early contributor to the Ethereum Foundation and Ethereum community. What have you been working on recently? And then we could talk about your article.
Yeah, absolutely. Thank you for asking, and thanks for pulling me in. Caught a little bit off guard, so I'm just warming up. So I got into Ethereum in 2017. I was working on some other things, including healthcare, which is maybe something we could talk about, because I chose to leave that space because it felt very stuck and there was no innovation happening. And that's one of the things that may be getting unstuck right now. But anyway, so kind of took my journey down the rabbit hole in 2017, joined the Ethereum Foundation late that year, contributed for a couple of years as a core developer. So I was primarily focused on the code, a particular piece of it, which is the virtual machine. But what I kind of found myself working on over time was governance, because it wasn't getting as much love and attention as I thought the technical pieces of the project were, because there are a lot of brilliant technical people working on that. So fast forward 3 years to the present, I've changed gears. I'm working on a new blockchain project called Space Mesh, which some of your listeners may or may not be familiar with. But I'm also, as you know, very focused on governance. And so I'm doing independent consulting for a number of projects on governance, continuing to research it, write about it, try to understand best practices, both in the on-chain world, as well as sort of things that we in the crypto space can learn about governance from the thousands of years of progress that actually was made, which we don't always appreciate fully in the pre-blockchain world.
So you were working on some version of this or multiple drafts of this for about a year. What was the name of the article? I'm having trouble searching for it, but I'm going to pop it in the notes real quickly. The one from a couple weeks ago.
The big one is called Autocrats and Anthropocrats. So this is kind of
Technocrats. That's what I was looking for. I was searching technocrats in your name, and it just wasn't coming. Okay, Autocrats. So walk through this, and I'll pop it in the chat.
Yeah. So the high level idea here is that I've coined these phrases, and I think that I'm trying to point to something that has existed for some time and give it a name. And specifically, what I'm referring to here is a up and coming political divide and debate. And I really I use the term, the crat term, intentionally, because I think that we have Republicans and Democrats today, at least in this country, and I think that if you fast forward 10, 20, 30 years, these could very well become actual political parties, right? So where Democrats and Republicans are divided on questions of the size of government and spending and liberalism and control and these sorts of questions, anthropocrats and autocrats are divided on the question of how much autonomy or agency in governance should be invested into automated systems, or you could think of this just generally as kind of computers, networks, AIs, machines, things like that, versus how much we want human beings to remain firmly in control and at the helm. And so as the name suggests, the anthropocrats are people who want people to be fully in control for the foreseeable future. And autocrats are a group of people who are very excited about certain aspects of projects like Bitcoin and Ethereum and blockchain in general, which allow us to hand or transfer some degree of autonomy to systems. And of course, there's strong arguments for and against both of these sides, which is what the article goes into. Excellent.
So the punchline for you is that the irony is technocratic leadership, I think, is having its moment right now. You've seen what's happened in Taiwan and South Korea, in Singapore, in China. It's not just authoritarian regimes. It's a mix, but the common thread in terms of who's been successful versus who has failed utterly, it's been the technocrats, right? So having some technocratic control over the governance systems of the future, which is really what crypto boils down to in a nutshell, seems like it could be a winning strategy. The dividing line here is how much of it is automated versus how much of it is dynamic, and how do you control the incentives so these different systems can't be captured? Is that a pretty good encapsulation of the two camps?
Yeah, I think it's fair. I think the core argument of an autocrat is that what these systems, I refer to them as kind of just general automated systems throughout the article, and the sort of specific incarnations are things like smart contracts, which is the most obvious example, but to a lesser extent, you could think of the monetary policy of Bitcoin as a good example of this. You could think of certain types of AI systems or autonomous drones as another example of this. The idea is that these autonomous systems, I think you could probably make the case that they're technocratic in nature, just because of the fact that they're designed and built and managed by technically minded people. But the main thing is that they're fair, right? Because an algorithm, like to an algorithm, you and I are two pieces of data, and all the data that's input into that algorithm are treated equally and are the same. But of course, we have to also consider the fact that algorithms often have bias embedded in them. So it's not that there is no bias; it's that the bias, is maybe inherent in the system because of the way that system was conceived or created. But at least the point is that the code is open source and it's there for anyone to look at, and any two parties, regardless of who you are or where you come from or who you know or how much you're worth or what language you speak, any of these things, we're all equal in some sense to an algorithm. And I think that that's one of the arguments put forward. And so I guess what I'm describing this is sort of like, what is the connection between this and sort of coronavirus in the world? Like could there be some sort of automated system put in place, right, where everyone knows the rules, everyone plays by those rules, to respond to this? And I think that you could argue that this is to some extent what's happening in places like China and South Korea, where they have apps and they assign people a status, and everyone is required to kind of use this app and play by the same rules.
Awesome. Well, a lot more to cover in that realm for sure. We'll definitely have you on when it's not so much of a cold call. But appreciate you being a good sport and hopping in this morning. We'll do a lot more of these. So
thank you, Ryan.
Beware if you're in the chat. You might very well get called out.
Thank you. Can I share two super quick thoughts? The first is I just want to express my gratitude to you for your incredible coverage of this over the past few months. You're one of the people that tipped me and I think many other people off to the fact that this was going to become serious. And so you and I haven't spoken in a while, but I wanted to say thank you for that. And secondly, baseball. Let's get it back. I'm with you.
Amen. Well, appreciate that, and good to hear, and hope you're continuing to stay safe. So thanks again for joining, and we'll catch up soon. Hopefully over a beer and a ball game.
I look forward to it. Thanks for having me.
Thanks, Lane. All righty. Let's see if Chow is around. It looks like he is. First, we've got a question. that Lane actually asked. He said, what are your thoughts about China opening up? I am going to defer to Chow, or we can include this in the conversation with Chow. But my personal thoughts are that China is opening, but they're opening slowly. And unfortunately, we are in a situation where I don't believe it's prudent to necessarily trust the numbers that are coming out of China. So, we basically need to look at all other economies outside of mainland China for better data, because unfortunately the history of misinformation is just too strong. And although things are certainly getting better, at least appear to be getting better, it has been a slow and steady process, will continue to be a slow and steady process. So I think I'm much more concerned about when China starts back up, who are they starting back up for? Because they are a net exporter in the extreme. If the rest of the world is still on lockdown, you've got these ripple effects, and this can have a gradual vicious cycle downward in terms of net new demand. I know Chow has written about this, so it is a perfect time to pull him in. I will invite Chow to the screen. And I love seeing the technocratic conversation going on the sidebar. So carry on. Chow.
Back to incognito mode.
I was just going to say, back. There we go. So Chow, live from the belly of the beast as well. How is New York right now? How are you doing today?
I've not been out for many days. From my window, I think the streets are pretty empty. I actually have a view of Port Authority, or the highway between Port Authority to New Jersey, and there's basically no car, a few buses, but looks pretty dead. The nice thing is, I don't know who else is in New York, but every day around 7 p.m. Everyone in Midtown starts cheering. I think it's cheering for like medical professionals, and it lasts for like 5 minutes, and that's like the highlight of the day. And it happens every day at 7 p.m. I'm pretty upbeat about it.
How are you feeling in terms of the markets and economy in general? Because it certainly seems that more people are in your camp where maybe the panic has subsided. Things seem a little bit calmer now. And yet, I think, you and I, and based on the work that we've done internally and how we're thinking about the markets, it seems like we are, light years away from the light at the end of the tunnel economically, even if it seems like the very worst, we might be getting close to that from the health crisis. Do you want to talk about the different bogeys that you've been looking at and exactly where your head is right now from a macro standpoint? What are the levers that you're looking to change in the weeks ahead? Who are some of the top people that you're following to build these different kind of mosaic views of the industry as you want to do? And what advice do you have for people that are trying to make heads or tails out of the massive day-to-day gyrations in the legacy stock markets?
Yeah, so I'm pretty much all the smartest investors I follow think that there is a little bit of more downside. Well, I guess ranging from a little bit downside to something really, really bad. I think most of them think that, or if I take the average of the views, I think we're gonna retest the bottom of March, mid-March in S&P, which means other stock markets around the world will probably follow. Commodity markets, oil, copper, all these things are gonna get destroyed. U.S. Treasury is probably going to zero or very close to zero along the entire yield curve.
Mm-hmm.
Gold, I think gold is probably the biggest consensus trade right now. Like everyone wants to buy gold, but there's still a little bit of potential risk there if we again have a big liquidation from the hedge fund, from sovereign wealth management funds, and that could cause another downturn in gold. But overall, I think most people are very bullish on gold. There is, of course, there is a thesis that I feel like a lot of people are missing when it comes to gold, is that this crisis is not inflationary at all. Even if central banks are printing a shit ton of money, trillions of dollars, it's not inflationary, because the money that's being printed is gonna sink the velocity of money, and therefore there won't be much money flowing around, while at the same time there is a much bigger demand shock. So people are consuming less. And historically, that would basically increase the real interest rate. And that generally has been bad for gold. So it's interesting. So there are two forces that are pulling gold in different directions. But I think gold will probably see through that, look through the deflationary pressure, and pay more attention to the money printing side of things. So that's how I think generally. In terms of people you should follow, I think I've been reading a lot of Howard Marks.
Chow, you froze for a second there. Anyone else having issues? Okay, looks like Chow is frozen in time, and we'll have him do a hard refresh. I think he was going to say that he's been following Howard Marks, which I encourage many of you to do as well. I wrote about Howard's most recent memo last week from Oaktree Capital. He's a legendary investor, probably the second most prolific long-term value investor to Warren Buffett. But if you go to oaktreecapital.com/insights, there's a list of Howard Marks's memos. I wrote about his from late last week, where he was talking about how he was defensively positioned. And yet he wrote another memo yesterday saying that he thought that defensive positioning might be overly conservative. So not necessarily saying that the bottom was in, but at least saying that he felt like he had a good understanding of what the unknowns were for the market and macro investors in general. I think I've personally been looking to the long-term buy and hold value investors that have a track record of understanding the markets, not necessarily outperforming the markets, but that have a good mental model for how this all works in practice. Howard Marks, certainly one of them. I think, it goes without saying that most people are probably looking at Ray Dalio, and Warren Buffett is not really opined, but I encourage you all to read Jamie Dimon's annual letter from JP Morgan as well, which dropped earlier this week. So you do have some other very thoughtful, legendary investors that are writing with great frequency now as the circumstances change. And Chow, I just filled in the blanks for you and talked all about Howard Marks and his memos and everything that he's written, which I think that you were just going to elaborate on before you got frozen, right at Howard Mutt, and then you went and then you went dark for me.
My building has this shared internet setup, like semi-public internet setup, and I think everyone is working from home, so my internet has never been this bad ever.
Yeah. Well, it's all right. We went seamlessly right off one right off the other. Talk about the new macro weekly piece that you're putting together for Messari, and what people can expect to see in these twice weekly posts. The first of which dropped yesterday. Yeah.
So I'm probably going to put together a either a weekly or semi-weekly, or twice per week kind of update on facts, mostly facts, that's in addition to the insights that I've been putting together for the pro readers. But there are weeks where a lot of things happen, and there are some weeks where nothing happens. But last week, I think it felt like it's been forever, but the really bad unemployment numbers that we saw was actually last week. And I think we just, that was basically the worst economic data that I've ever seen anywhere of any recorded history. And I think that's the main reason why people are so surprised and by the fact that the S&P is looking through that and has been going up forever. But that was what happened last week. This week, I have a very interesting piece together called the Everything Bubble. Some of you might have heard the term, but it's basically, we're basically at a junction in history where we have a dozen of interrelated but separate bubbles across the entire financial and economic system. So this includes things like commercial real estate, pension fund, junk bonds, hedge funds, Eurozone crisis, central banking crisis, basically a dozen of them. So I'll give a nice introduction to all these bubbles that are happening right now. And I don't want to write this because I want to write this to scare you guys, but I think I want you guys to be prepared for something that's about to happen sometime over the next 1 month all the way to 3-5 years. So I think that's going to be pretty interesting.
Obviously, we've got the unemployment numbers. Some of the interesting charts that you'd posted were not just about the U.S. Health crisis or what we know very well about the stimulus and some of the stateside economic impact. But what was interesting is there is some pretty bad news in terms of China's restart and in terms of Singapore. The monthly production index, the PMI for Singapore, dropped down to 33 at last check. So even a country that has been relatively insulated from the health crisis and is now a little bit later on under lockdown itself is really just starting to see their downturn. And China, when you think about their PMI, has not exactly been a V shape. If anything, it's an L or a kind of slow and gradual uptrend. What are the key KPIs that you're looking for, and where are you sourcing that information?
I get most of the information on Twitter. Basically, there's maybe 50 dozen people that I follow on Twitter. But anecdotally, so here are a few interesting observations about China. Number one, so Wuhan just reopened yesterday, out of basically lifted the lockdown between the city and the rest of the country. And the people celebrated, but in reality, there's still a very extreme social distancing measure that's being imposed. On the other hand, the rest of the country seems to getting a little bit complacent, in a sense that people go to these touristy areas, super crowded. There's basically like a zero distance between people, and most of them are wearing masks. Of course, it's kind of part of the culture, but I think people are kind of getting complacent outside of Wuhan and Hubei province. However, here's an interesting stat that I saw. The traffic in Beijing on weekdays has gone back to normal.
We're having some slowness with chat again.
On weekends, it's basically dead. There's no traffic on weekend.
Mm-hmm. We're going to have to make sure that Chow. We're going to have to make sure that Chow gets a wired internet. But for those of you that want to read his daily analysis on Messari and for Messari Pro, he has many more actionable insights and a synopsis of all of this and more that you can get by signing up for the newsletter, and in particular the Pro research and tools. So Chow, thanks again for hopping on. I know we had a little bit of trouble today, but we will resolve that for the next time that we have you on. So until then, stay safe, and we'll catch up on Slack. All right. We had a few questions, some minor difficulties. Moon Whale Danny, nope, was not you. That was some technical difficulties and bandwidth issues in New York City with everybody working from home. Chow was no different. Lane asks, what happens to Bitcoin? Is there decoupling or not? I think this question was directed towards Chow, although he has been pretty much consistent, and I think our general thinking from some of the investors on the Messari side have been consistent that there might not necessarily be a decoupling from Bitcoin and gold, but there certainly is a decoupling from Bitcoin and other risk assets like the S&P and individual stocks and bonds. So I think we will see, but I will let him chime in via his newsletter and during his next update once we've gotten those technical issues squared away. All right, we've got too much preference correlation between equity and crypto. This is from Wee. I think I just answered that in the context of Lane's question. Yes, and we've talked about this before. In a liquidity crisis, correlation of everything goes to 1. That's not cash. And I would expect that as the bottom is set in the stock market, as panic subsides, and as people can kind of wrap their heads around the second order, third order effects of this health crisis on the economy and start thinking about what a smarter revised economic forecast looks like, you'll start to see crypto outperform equity, because more people than ever will be focused on inflationary impacts of the massive global stimulus that we've seen. I think our general take is that this is going to happen with emerging market currencies first. The dollar is still going to be very strong. So I would imagine the influx of demand for crypto in this next cycle most likely comes not from institutional US investors, although that's possible, but more so from emerging market investors that are looking to hedge against weakness in their own currencies. Swordsmith, if the value of the dollar drops significantly, is bubble still a meaningful concept? This is a great question. And I like to quip that if the value of Bitcoin goes to $1 million, it might as well go to a quadrillion, because by the time we see $1 million Bitcoin, it will be very, very bad news, not for everybody else, but for the dollar and fiat currencies in general, because that will mean that we are at $20 trillion of value for Bitcoin. I don't know about you guys, but that to me seems like it would require at least a 50% debasement of the dollar. And once you get to 50% debasement, all bets are off, and things could get very weird very quickly. All right, we're going to kick over to Jack on our team. Jack has spearheaded a new project that's geared towards students to take advantage of some of our research tools. Free money if you are an independent researcher and you think that you know a thing or two about crypto and about what assets might do well, what trends might be worth following, and where there is signal in an otherwise very noisy market. Connor just posted info on the research competition in the chat. Jack, tell us what you've been working on.
Awesome. Yeah, thanks for having me on, Ryan. But Yeah, so I guess the kind of origin of this student competition was we were trying to think of ways to get students more involved, thinking critically about a lot of these important topics that your everyday crypto analyst kind of goes through, because you figure crypto's already a young industry, and so as more students graduate, right, this is going to be the next big wave of analysts entering the industry and then shaping important narratives. So we thought it was important to get them ingrained in using tools that professionals use, kind of in the same light that you're not going to start a job on Wall Street without already having used Bloomberg Terminal in your finance class, right? So we launched this student research competition where students can submit a research report covering 2 prompts. The first being the strongman, where they can present a bull and a bear case for a specific asset or a specific general sector. So you can talk about trends that would go well for privacy coins, for example, or maybe a world in which they wouldn't be needed as much. So those are the 2 prompts. We are giving away over $1,000 worth of Bitcoin, and from when we started, that is now actually a lot more Bitcoin than it was, given the way the markets performed. So get a chance to get some winnings there, and then the competition will actually be judged by none other than Pomp, Melton Demirs, and Danny Grant, as well as Ryan. So kind of a cool opportunity to actually get your work in front of some of the bigger personalities in the space. If anyone's interested, it's going to be running through the end of the month, and you can kind of find more info. I know Connor posted something, or just email research@messari.io.
Awesome. How have the initial applications been? Have you seen some good submissions so far? And what exactly do you expect in terms of influx?
Yeah, definitely seen some good submissions. Honestly, blown away at some of the quality of thinking in a lot of the topics. Almost making me scared for my job as these next killer analysts come.
Well, that would be a good thing, because we are going to continue growing the team, I hope. So, Jack, great work on this so far. For anyone interested, we've got this in the notes. You should hop on over to Messari if you think you would like some free money and you've got the chops to actually win this damn thing. So, Messari Student Research Competition. Jack is a wild man and has been killing it on the DeFi research front for us. So make sure that you check out all of his work on Messari and a lot of the good stuff that he's put out on Pro to monitor the health of the DeFi ecosystem. Jack, thanks for joining, and thanks for spearheading this particular initiative.
Awesome. Thanks, Ryan.
Take care, man. All righty. We've got some exciting guests coming up on these live streams. We've got Balaji going to come on again at some point in the next couple of weeks. Nick Carter from Coinmetrics and Castle Island Ventures is going to join us on Friday. And we've got Joni Levin from Chainalysis likely to join either next Monday or next Wednesday. Be sure to check out all the updates, subscribe at crowdcast.io/2bitidiot if you want notifications for when these are going live. We'll also continue to simulcast them to YouTube and to Twitter so that we can catch you wherever you might be sitting in front of a screen. And let's face it, we are all sitting in front of our screens pretty much nonstop, 24/7, and will be for the foreseeable future, for better or for worse. So we might as well make the most of it. From my end, it is a 72-degree day and sunny here outside of the Citadel. I can hear my kids playing outside. I do not see any other questions in the interactive Q&A. We had 2 speakers on today, both of them from Messari. We did cover a lot of ground in a short amount of time. So I'm going to give everybody the 15 minutes back instead of just bloviating and not really touching on anything of interest, since we've already asked and answered all questions. And I'm going to go play with my kids and get a little fresh air. So this works, win-win for everybody. Thank you for joining. Tell your friends, tell your colleagues. I'm doing this every Monday, Wednesday, Friday. Trying to keep sane and add a little bit of value as you think about rebalancing your own portfolios, working hard, and getting through this wild, wild time that we're living in. Until next time, be good, stay safe. Peace.